Good morning, traders. It is Thursday, June 13th. Taking a look at the charts, we've got the SP 500. Now, in overnight trading, or this morning, actually, it was late last night, we saw the market have a little bit of a sell-off. You can see this lower wick here. Let me just zoom in. You can see the lower wick moving down. It's recovered really nicely. It looks like it was a little bit of a shakeout in the market in overnight trading, and we're starting to see the market rally up here. Now, this is a little consolidation. On the SPY chart, it looks somewhat bearish. With that in mind, we are in an uptrend, and this is where we talked about it yesterday, where the market was in red bars indicating a downtrend. Then we went orange, meaning we're neutral, and the market's had a nice little pause the last few days, or last two sessions. And it's pulling back, and it's at that 5-day moving average. And when you're in a high momentum move, you typically stay above the 5-day. So it looks like it did a shakeout, and it's starting to rally today. We'll see if it gets some follow through. If it starts to break higher and move up, then we are going to probably see precious metals pull back. It'll be interesting because we are waiting for the time when precious metals and gold miners start to outperform the stock market. Both can be rising, but we'll see the miners actually start to outperform the actual equities market. And that's what we're waiting to see. When that happens, that usually means we are in the last couple months of the bull market in stocks. And we're not fully seeing that yet, but I think we're really close. So we'll see if the stock market moves higher and miners continue to hold up or move higher. That'll be a sign that we're getting close to the final months here of the potential bull market in equities. Now, overall, the trend here is to the upside. We have green bars on our 30-minute chart. It's been consolidating, and it looks like today it might be trying to put in, might have put in a little intraday washout low, and it's starting to rally. Going to take another run up at this 2,900. It's hit this level a couple times, sold down, hit it again, pushed higher, sold back down. Let's look at the SPY real quick. Get a visual for it. You can see we had that big pop in the drop, looked fairly bearish, but we didn't have another follow through big sell-off day in the market. We didn't get below that 5-day. We're still holding up. So this is a very high momentum move at this point where we could continue to see this move and push higher. Now, if we take a look over at the safe haven plays, let's take a look at bonds real quick. Bonds holding up in this nice bull flag formation. If we zoom out in time, I feel as though we're somewhere in this type of pattern over here where it might continue to flounder. Again, there could be the point here, there will be a point here where bonds and miners start to outperform the rest of the market, and we'll start to see them move up potentially as money kind of just flows into the safe havens and trickles into equities still, holding equities up. So overall, we are bullish on bonds. It looks like at any point it could even continue to rally, but we do need to anticipate we could see a multi-month pullback or pause, much like we saw over here when it put in a top, consolidated for 3 months. Over here, a top consolidated for more or less 2 months before breaking to new highs. So bullish on the safe havens, but they're a little bit out of favor at the short-term moment if equities break to the upside. Looking over at gold real quick, gold, silver up a little bit this morning, nothing significant. They continue to hold up in this pattern. This is potentially a nice bull flag forming. We could see a 3-wave correction if we just zoom in on, let's just focus on gold here. If we do see gold have a pullback, we can get a measured move here from using Fibonacci extension from the high to the low up to today's high. If that ends up being the high, this gives us our price pattern where price should go. And if we draw that line in here, we've got the sell-off, we've got the rebound, we've got the measured move down here around 1330, which would more or less kind of shake things out. It's breaking this previous low here. That's what creates this ABC correction. It's this break of short-term support that flushes the market out. It'll come down. By that time, the 20-day moving average will continue to move up. It should hold above that level or flirt with it for a little bit, but that would be a very good buying opportunity to get back in for a continued move to the upside going forward. If we take a look over at silver, silver's got these bearish inside bars. Silver does this quite often. We had inside bars over here. Inside bars mean you have a huge down day, and then all the rest of the days kind of are stuck inside this big red bar. And usually when it fades its way up to the upper end, you can see the same size bar. You can usually see that kick in and happen again. It happens quite often. Um, Looks like we've got something similar to that. We've got a bear flag. It doesn't have to go to the upper end of the range. It can very easily kick in at any point. The length of this red bar, once it sells off, is usually what the length of the next bar is. So there is potential here that silver's still going to be in some volatile bottom. It might still put in some rounding formation, have some ABC correction, breaking this previous low to flush out, and then maybe it'll work itself back up. We're going to have a really significant breakout zone along this level, especially if it pulls back and then works its way back up here. This will be a fairly significant breakout level for silver. Looking over at miners real quick, miners really they're performing very well. They have a nice quick rebound to the upside, and we'll see if this continues to consolidate. We are above the key moving averages, the 20, the 200, the 50. It's chopping around the 5-day here, this finer one, but overall still holding its ground. And we'll see if again, see if it consolidates or if it's going to continue to move higher with a follow-through breakout. We are positioned long in gold in miners using the ETFs, and we're waiting for some new potential setups in the market. Taking a look over at the dollar real quick. US dollar is yesterday gap lower, rallied back. It's struggling to hold up here, but it is more or less still holding up. You can't really follow this ETF too much, but more or less you can see there's the lower end of the channel, the upper end of the channel. It's holding and flirting with this level. If it does continue to rally up here, we're going to see gold, silver miners likely pull back, consolidate longer before they take another run higher. But if we see the dollar start to break down here, if we do have this short-term drop, we've got this short-term little bear flag. If it does start to break down, it could signal a sharp drop in the dollar, which would trigger a big rally in precious metals. So at this point, again, we're still neutral on the safe havens. We are bullish longer term. Short term, though, we are kind of bearish, simply expecting the dollar to move up, equities to try to push higher. Money is going to continue to flow into the dollar and equities at this point, I think, and the miners, metals are going to struggle and trade sideways to slightly lower. That's what I'm more or less anticipating at this point, but I am expecting metals to break out and rally in the future here, the near future. Looking over at energies, natural gas continues to just kind of work itself out. I do feel as though it's going to try and work itself to 245, 50, maybe 255. Again, it's in a downtrend, and I think we're starting something very similar to this here, where we could see the market consolidate, kind of work itself up, and potentially go back down and test the $2 level going forward, with a great opportunity for a significant low come September time. Looking over at crude really showing the volatility. We've been talking about this. It's going to be a real volatile couple weeks here. We had a nice strong pop, big strong sell-off yesterday. Today, another rebound back up. So down 4% yesterday, up 4% today, or 3%. It's all over the place. Some pretty good volatility. This is what we usually see near market bottoms. The market came down, had a consolidation, has come down for its measured move. Now it's flushing out and trying to carve out this bottoming formation. We're going to have resistance across this level here. This could be seen as a W or a double bottom formation. If we break the middle of this W, the distance from the top of the W down to the bottom of this pattern is usually the breakout point to the upside, roughly somewhere up here, which is around that 58 area, which goes right through the heart of this consolidation right here. So we're going to let it continue to work itself out. Looks like it's carving out a bottom. Again, market takes time, and this could chop around for a little while, potentially still poke down and test that 50, maybe break 50 intraday wise. I think 50 is a pretty solid number, but the market loves to break those numbers even just intraday to run the stops, shake everybody out, and then reverse again. So we've got a low here. We could come down, make another minor low, and rebound it and start to carve out a bigger bottom going forward. Last but not least, taking a look at Bitcoin here. Overall, it's still forming this bearish formation. Much like silver, it has that those inside bars, meaning we got a big red bar. All these other bars are more or less inside that bar. It looks fairly bearish at this point. We may look to get inverse. The GBTC ETF had a nice pop yesterday as it's pushing up into more or less this resistance area. The higher this goes, the less downside risk we have because we want it to get stretched up as high as we can, anticipating a potential drop in the market. We'd love to see this get short, see this work itself down somewhere into the 72 area across here, which will act as short-term support. And then if it breaks that, this could be seen as there could be seen as some type of neckline across this area here that if broken, we could see it actually go down much lower to the 64 area on the market to fill this gap. And that more or less, I would think, would be a measured move. Let's just see where that measured move would be with Fibonacci extension. We go from this high down to this low, up to yesterday's high, carry it forward. So we got a downside potential target if this drops. We go A, B, C, somewhere down over here around the 65, 79 area in the market. So more or less filling most of that gap, but that would be the downside move going forward. The 618 is the first level you'll usually find some type of support. Usually if it has a bounce at 618, it's going to hit that 100% measured move. So this is where the red bar actually would be. We got this red bar. It would bring us pretty much down to that level. That would be just a quick visual target and a measured move, and then potentially go further down. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.